Hello and welcome to today's webinar, Applying AI Technology to Optimize Data and Enhance Decision Making. My name is Victor Anderson. I'm Global Content Director of Waterstechnology, and it's my pleasure to be moderating today's discussion. Now, today's webinar is sponsored by SmartStream. I won't read out the intro to today's session, given that it's on your screens in front of you right now, but I would like to share with you three key themes that we will be covering during the course of the next hour or so. We'll be looking at the extent to which financial services firms are being hampered by their inability to make the most informed, transparent, and repeatable business and investment decisions due to poor quality data. We'll be looking at how firms can practically and meaningfully address the challenges just outlined, and the technologies available to help them improve their data integrity, accuracy, and completeness. And finally, we'll be looking at how financial services firms can make the business case for either developing in-house or buying and deploying off-the-shelf AI-based tools to help them manage their data with a view to optimizing their decision-making. Now, as you can see, we've got a great lineup. We have Yu, who is Director, Senior Principal Data Scientist within Advanced Digital Solutions, which is part of BNY Mellon. We have David Wright, Chief Data Officer for North America at Commerzbank. We have Victoria Harverson, Global Head of Business Development at SmartStream. Victoria is based in Singapore. And as I mentioned, my name is Victor Anderson. Now, I'd like to thank today's audience members for joining us and giving us an hour of your time. Here's what you can expect during the webinar. We'll be covering the areas that I've just highlighted, plus we'll be hearing from, obviously, BNY Mellon, Commerzbank, on the buy side and the sell side respectively. And of course, SmartStream, which has for a number of years now been infusing its entire technology stable with some really interesting AI functionality, notably, but not exclusively, observational learning technology. Now, today's discussion is going to run for approximately 60 minutes and will consist of a panel discussion of 4 poll questions, which we will push out to audience members during the course of the session. Each poll will be open for approximately 5 minutes. And if you do have a question of your own, you can send that through to today's panelists. So you can direct it via the Ask a Question tab at the bottom side of your screen in front of you. Please note that the views expressed in this webcast are those of the speakers only and do not reflect the official policies or positions of the firms they represent. The end users in this webcast are not affiliated to and do not have a relationship with the sponsor. I think it's important for us to get that out of the way. And they do not therefore endorse its products and or its services. Right. We're just about to kick off our discussion, but before we do that, I'd like to ask my fellow panelists to introduce themselves and let today's audience members know a little bit about what they do on a day-to-day basis within their respective organizations. So in this order, you'll start, please, and then David, and then finally Victoria. So just a few words about what you do within BNY Mellon on a day-to-day basis.
Thank you, Victor. Glad to join the panelists. My job in BNY Mellon is working with different lines of business and leverage data to build machine learning and artificial intelligence solutions to add value. It could be to build predictive model to aid decision-making in custodian or wealth management branches, or to enable automation in various ways, or to detect outliers in various processes running in BNY Mellon. Thank you.
Good. Thanks for that. David, do you want to just let today's audience members know a little bit about what you do from 9 to 5?
Absolutely. Thank you, Victor. And great to be here with all the rest of the panelists and looking forward to the discussion today. Give a little bit of introduction to myself. Victor said who I am earlier. I'm David Wright. I'm the Chief Data Officer for North America for Commerzbank. And what that means day to day, 9 to 5, I am based in New York, and we do all things wholesale for Commerzbank here in the US. And that means I need to enable data within our North American microcosm on a daily basis to support our front office, middle office, and back office needs. And that's leveraging data that exists both on a global scale and data that exists centrally within the US, and being able to bridge all of that together while experiencing emerging, evolving architecture, data requirements, et cetera. So keeps my life very interesting, as that is a constant evolution.
Good. Thanks for that, David. Victoria, finally to you in Singapore. I know it's late there. Thanks for bearing with us and for being involved in today's discussion. What is your role as Global Head of Business Development at SmartStream entail, Victoria?
Yeah, sure. And no worries about the time zone. Thanks very much, Victor, for asking me to participate, and to you and David as well. So in terms of my role, I'm responsible for the business development strategy of our latest AI and machine learning data solution at SmartStream called SmartStream Air. I've been working for fintechs for about 15 years, working with lots of different technology solutions, delivering them to banks and fund managers and asset managers. And my role's definitely very much a business one. So sort of upfront disclaimer there, it's much more business. I'm not, a data scientist or technical. I'm very much focused on working with banks, financial institutions to determine how they can strategically sort of adopt the technologies that we're going to probably talk a great deal about today, and the business cases behind those technologies. Yeah, so that's me. Thank you for having me.
Good. Okay. Right. Let's kick off today's discussion. And as a point of departure, let's look at the current situation across the industry with respect to the day-to-day data management and or optimization challenges facing capital markets firms, and their ability to make the most informed, transparent and repeatable business and investment decisions. It's a bit of a mouthful, but in essence, what we want to do is look at the state of play across the industry and try to understand the challenges facing capital markets firms when it comes to their day-to-day kind of data management and or optimization challenges. I'm going to ask David, if you wouldn't mind kicking off proceedings, to talk a little bit about it from a sell-side perspective and obviously from Commerzbank's perspective. And then I'll ask you to give us a buy-side perspective, obviously from BNY Mellon's perspective. And then Victoria, it would be great if you could also weigh in, but from a slightly different perspective, you could let us know typically what you are hearing from your clients that you going and speaking to fairly extensively, buy side and sell side. If you could give us a sense of the challenges that they're facing with respect to data management and optimization challenges on a day-to-day basis. David?
Lots of challenges, right? But lots of opportunity all in the same breath as we think about what we need to keep up with on a day-to-day basis. And that crosses our data, our infrastructure, our people, our business value proposition, and how are we bridging all of those together on a regular basis so that we can keep moving toward our target state and our strategic state as best possible. But, in the financial services industry, many of us have growing up, and I'm sure we'll talk about this over the course of everything we share today, but organizations that have been around for quite some time, and organizations that are built on mergers and acquisitions and a number of different toolings and infrastructures and geographical inputs, et cetera, which makes for a very, very complex environment in order to drive toward the most agile and innovative abilities that we actually need to be doing on a daily basis. And we need to make the complexity of the underlying environment as seamless and as invisible to our users and to our processes as absolutely possible. And that can only be done with the continued evolution of how data is integrated into the process to solve business value or provide business value while being enabled through solid technology infrastructure underneath, which again is made up of many, many complex components when you look at large institutions. So the ability to move forward in that environment and the ability to figure out the right approach in that environment and the ability to figure out what that end goal looks like to support the business value is an ongoing exercise that we have to reevaluate on a daily basis, and then reevaluate how are we blocking and tackling on our journey there to leverage AI, to leverage the data, to leverage all of the key components to make it as viable as possible.
Mm-hmm. Good. You do you want to talk a little bit about BNY Mellon's kind of view of the world with respect to the ability to make the most judicious business decisions, which obviously that's a key kind of component of your role. But maybe just one step back from that is, what are the challenges around making really good decisions based on on the kind of the challenges that that David has just mentioned now around data, etc. Obviously, your role is directly contingent on the quality of data that you are building models, etc. on, right? So, do you want to talk a little bit about the challenges around ensuring that data is clean and reliable and transparent, etc.?
Sure. Yeah. So some of the machine learning models my team work on is related to the quality of data. And when we talk about quality of data, we sometimes treat it as if the quality should be perfect. If it's not perfect, it's substandard and technology is to blame. But if you think about it, data is often generated by the business processes and by systems. If the data is not flowing or data has errors, it's sometimes reflecting human input, or the system fails, or some other events. So it's not always technology to blame or the data infrastructure to blame. And there could be modeling solutions to it. For example, BNY Mellon is the largest custodian bank of the world, and we actually clear and handle a lot of transactions or wire transfers from clients. And in this process, trillions dollars worth of transactions are flowing through, and some small percentage fails or has some issues. And the issues could be multifold. It could be the client did not give clear instructions, or the securities to be transacted are not available, or some other system failures. So to be able to identify them in time and deliver an advance notice to clients to say some of their transactions are not going to go through would win them time and allow them to secure alternative strategies. So we have machine learning models built to predict which transaction is going to fail with hours or sometimes in days in advance, so that the downstream clients could take action. Take another example, we serve as custodian for many asset managers. And for their underlying security transactions, we need to calculate net asset value. And it sometimes goes wrong. Most of the time it's correct, but sometimes it goes wrong because of human entry error or some accounting step is not correct. And if the value is shown wrongly to the downstream client, that will cause problems with themselves and with clients. So we have anomaly detection processes to automatically capture incorrectly calculated NAV value. So those, although there are accounting steps checking these, but it's like finding a needle in a haystack. It would be pretty challenging for humans to capture all of it. And there you have a role for machine learning to play. You can say these are all data-related questions, but the solutions could be human, and it could also be model playing a role. And eventually it ensures the data flow and the quality of data going down to our respective clients.
Good. Victor, do you mind if I ask you a question?
Yeah, absolutely.
Do you mind if I ask
Jump in, David?
Yeah. So on the data quality front, I find, and I'm curious if you encounter this a lot, a large factor that we have to deal with from a data quality perspective may not, you said this yourself, it may not be the tools, it may not be the infrastructure, and in some cases it's not even the data, it's just the understanding of the intent and purpose of the data for how it was originally created or crafted, but the competence and understanding of that downstream in terms of how it should be leveraged is not always well understood. And so a part of data quality resolution is actually helping individuals and consumers, producers understand what it is and where it's consumed to help bridge that connection. Do you find that to be a similar scenario for you?
Yeah, definitely. I think the further away you are from data generating process, the less you have in terms of data understanding. That happens within the same company. If, for example, data scientists try to build model using data generated by another team, we have to do a lot of back and forth to ask that team, what does each column mean? And if the data flow out of our door to our clients, we really need to provide clear documentation. Otherwise, people will assume something. And upstream, we get data or we purchase data from vendors. And a lot of times, it's not clear how they define a column or how they transform the data from the raw format to the format we see. if people are lazy and they assume something or the document is not complete, then you could be using data for the wrong purpose. Maybe the data is correct for what they intend to be used for, but if you assume something and that is deviating from what is truly generated for, then you can have very wrong usage for it.
Good, good. Okay, Victoria, I'm very aware of the fact that we haven't heard from you yet. So what I'd like to do is ask you, can you give us a kind of a sense of the state of play? I know that you've got a global role, so you speak to capital markets firms all around the world. You speak to buy side, sell side, mostly sell side, but some buy side too. So I think you are especially well placed to talk about the typical challenges that your existing clients and also your prospects hear from you on a kind of a day-to-day basis with respect to, that you hear from them on a day-to-day basis with respect to the challenges that they're facing around getting their arms around their data and understanding what the data means, where it comes from, how reliable it is, the lineage, all that sort of stuff. Do you want to talk a little bit about what you hear from your clients?
Yeah, absolutely. And just slightly a different sort of perspective maybe from David and you is we often work with the consumers of the data in my role globally anyway, rather than the people that are actually generating the data. And in respect to sort of the day-to-day data management challenges that we see all across the board, I think most firms really share a great deal of exactly the same issues when it comes to sort of day-to-day optimization. And the problem really persists that you're just getting very high volumes of non-standard, inaccurate data coming into every kind of buy-side and sell-side firm in lots of different shapes and formats, and being able to quickly just consolidate that, reconcile it, handle it, manage it. It's often still very manual, and it takes data analysts a huge amount of time and effort sort of still shaping, cleaning, normalizing that data. And I think in respect to this conversation, that's just on the operational side, just no fun and no gain for our people and our human resources to be doing that. So I work mostly with the operations functions in data integrity and reconciliation all across different financial segments, and they want to be focused on optimization, being creative with running business processes and great businesses, not the data work. So I think the key challenge for me as a sort of takeaway is all this time spent on handling data without intelligent tooling is a major productivity issue, and you're introducing human error risks and masses of productivity losses. Not to mention, you're not able to run business intelligence on the data unless you've got an intelligent tool. So that, I think, is the standard sort of common challenge across all the different segments. But we'll probably touch more on use cases and things like that as well.
Yeah, I hope so. And I hope we...
was Victoria's view. I think she was representing the data recipient, that if the data generator send out data in bad format, then the recipient has to clean it up, so to speak. But BNY Mellon being one of the large data generators, because we sit on top of everyone's assets and clear them for various transactions, internally there are a lot of effort to send the data to clients in a more standardized way, in a more systematic way, such as APIs, and at least make sure across different BNY Mellon functions, the data out of the door is more standardized, so that if you deal with one department versus another, you don't get different formats of reports. Because there is a common understanding that the client side wants some standardization and ease of consumption of the data flowing on their end. So we are making investment on our end to serve that need.
Good, good.
And that's fantastic. Okay. Go ahead.
Sorry, Victoria, carry on.
No. I was just going to slip something in there. There's a slight delay. It's okay.
I was going to say...
there's an ever so slight delay.
Okay. You speak, Victoria.
I think there's a slight delay, so I was going to answer, and then crosswise of the talking is fine. I'll be quiet.
Okay. What I would like to ask you though is, I know that SmartStream has been doing a lot of work around observational learning, which is very interesting, and the way an AI can observe a human doing a particular task and then look to actually improve and reduce the time it takes to do that task and do it more accurately, etc., and then take over that task so that you don't have a human actually kind of touching data any longer, and you've got the AI that kind of gets better and better as it matures and becomes more experienced. That's a really interesting area of discussion, and I hope very much for us to be able to talk a little bit about that and SmartStream's work on that, because I think it is quite it is pushing the boundaries of what the technology is available to do right now. What I'm going to do now for members of today's audience is to open the first poll question. It should be there. It is in front of you right now. To what extent does your firm suffer from poor quality data? I know that, look, it's going to be quite difficult to put yourself in a particular camp, but it'll be really interesting. You've got 4 options there. Choose the option that is most appropriate to you. I'm sure that that each of those options isn't perfect for you, but the most appropriate option, if you wouldn't mind just selecting that and letting us know. In the meantime, we're going to continue with the current challenges facing the industry. And we're going to be looking at which parts of the business, so the specific business functions and or processes that are most being hamstrung right now by poor quality data from your perspectives. Now, is that determined by, among other things, the underlying technology stacks? David, you mentioned it a little bit earlier. You know, there's been a huge amount of M&A and legacy and proprietary technologies, etc. So is that contingent on the underlying technology stacks? And is it also contingent to a certain extent by the experience of in-house IT resources or whatever? So those are things to consider. But let's talk about which aspects of the business, the specific business functions that you guys see as most hamstrung by poor quality data. I'm going to ask you to give us BNY Mellon's perspective. And then, Victoria, let's hear a little bit about, I'm sure you'll probably talk about reconciliation or more kind of ops and back office type functions. And then, David, I'm not quite sure where you're going to come at this, but I'm certainly looking forward to hearing your perspective. So you talk about the specific business functions most affected by poor quality data.
Well, so actually that's harder for me to answer because the machine learning group where I'm in, within BNY Mellon, we take projects and wherever machine learning and AI modeling can add value to the line of business, we'll gravitate towards that direction. So our prerequisite for any project to start is you have decent amount of historical data for the model to train on. And if it is crossed, then we'll not even go there. The project wouldn't start. There are many promising projects from the business perspective. It is good, but when we look, there are not enough history of data. Then we have to pause and pull out. And there are a number of such projects. I guess so. It's hard to say which line of business is most challenging because we don't venture very far when there are no high quality data. What I would say is many businesses, unless someone specifically say they have a urgent use for historical data and long history and high quality of historical data, their IT effort would focus on live data going forward involved in production. And they ensure the quality of those data is high and is supported and doesn't go offline. But machine learning models, I think Victoria can probably comment on this. In order for the performance to be good, you need quite a lot of data and consistent formatting and high quality of it. If the business or business IT forever focus on forward-looking data, they might just change the way they generate data or store data, change the data definition, or not even save the dictionary and have such memory exist in some analyst's head. And if the analysts leave, then nobody can interpret historical data. Those are all causing massive damage when it comes to model building, because you have nothing to train a model on, then you cannot do anything. So that would be the biggest challenge. A lot of times we talk to the business and they realize they need data, they will start collecting today. It will take them 1 or 2 years before we can revisit the problem, because that's the minimum amount of data we need for training models.
Okay, good. Thanks for that, Yu. Victoria, typically when you are visiting clients and talking to clients, which areas of the business, specific business functions, are most affected by poor quality data in your experience?
Okay, there's a couple of different examples. I think when it comes to data management and reconciliation, very repetitive tasks and making them sort of more efficient and cost effective to perform, it kind of goes agnostically across all of the areas in middle and back office operations. A couple of things we've picked up, and I work with corporate transaction banking, particularly in this region in Asia Pacific. There's actually a great deal of what they would call ill payer discipline. So you've got lots of payments coming into the organization being clumped together. The receiver needs to disaggregate them, needs to reconcile them to invoices and different documentation and different sort of data sets, or the counterparties in this region are sending in PDF and unstructured data. This is really an industry issue. We're actually starting to take a look at this more and more. It's a big day-to-day problem, and as in, you know, taking unstructured data, scraping it, feeding it into transactional data reconciliation processes. So that's one thing, you know, we see a lot of in terms of the actual business functions. I think things like security services, risk management. I know regulatory risks, operational, liquidity, counterparty risks, they might need to be dealt with in a T+2 timeframe. So tackling some of those, you know, these issues when managing data with AI efficiently and effectively, for example, can give the organization a big competitive edge, an advantage if they can get that right by introducing AI. And there's other things, regulatory reconciliation and data management. So MiFID II, you know, you need to get those reconciliations and data management processes in place before you can trade. And you may need to look at files across 100, 150 plus fields. And AI, machine learning, the type of technologies that we support and we provide are able to manage that. But those are some of the examples, I suppose, where we see some real sort of issues and requirement for AI to get more efficient and more, you know, faster at delivering these data management processes.
Okay, thanks for that, Victoria. David, I'd like to put the same question to you from your perspective as basically head of data in Commerzbank in North America. What areas of the business do you believe, and you probably actually best placed to answer this question, you've got an overall kind of remit across the entire business. What areas do you believe are most at risk from being served by poor quality data within an organization? And you don't necessarily need to talk from Commerzbank's perspective, but kind of generically, you know, what areas are particularly sensitive to poor quality data?
I think there's a bit of a transition going on here, and maybe it's just an observation of mine, and maybe it's something that's been in existence for a while. But you know, when I was listening to Victoria and she was introducing herself about predominantly dealing with consumers of data and coming in, and I think, you know, where Victoria started that, there's a huge where we start to bring all this data together, we start to blend it together, we start to have this need for uniformity and normalized data in order to solve for this cross-geographical, cross-functional area reporting, whether that's finance, it could be compliance, it could be risk. Those are the traditional spaces. And when I say traditional, I'm talking about the evolution of chief data office roles over the last 10 years, where a lot of emphasis has been given, particularly in financial services, because those in these large organizations are the areas where everything starts to pool together. And it goes back to my comment earlier about, is it misunderstood, or is it actually wrong, or is it not quite brought in and normalized in such a manner that everybody is looking and seeing the same thing. So these consuming areas were huge drivers and still are in terms of being impacted by poor quality, lack of understanding, data inconsistency, lack of conformity of data flowing through the architecture. So that makes sense. And then something else is, sorry, Victoria, was resonating on things you said. You also keyed in on the operational component. So you get into these back office, middle office functions where you are reconciling data that is flowing through the food chain. And you're needing to make sure that it's staying consistent and everything is doing what it's need to. So you have a process-oriented view on a specific set of data that is in motion that requires some level of understanding. But I'm going to say, for the sake of this conversation, maybe a little bit more myopic in the sense of it's scoped to a specific process or function, whereas when you get into finance risk, other operational reporting on a broader scale, you're bringing in entire data sets that cross customer data, transactional data, linking it into the product components of your organization, whatever your commercial products or products that you're delivering to your external consumer base are. But where I was making my point at the beginning about potentially a transition is data is becoming more and more cyclical. So what used to exist more in a linear fashion where data was produced at one place and then fed through is now becoming cyclical in the sense that, let me just talk front office for a moment. Front office might be identifying a customer, starting that onboarding process. So they are in essence at the very, very beginning of the food chain, but they also sit at the end of the food chain because now they want to consume that same data plus all of this other stuff about that customer that needs to circle all the way back around and end up in their CRM type tools so that when they talk with that client, they have that most holistic perspective. Potentially it's building the AI and the machine learning onto that view. So, and then if I've got an onboarding team, similarly, like what kind of controls and metrics are they looking at? So what used to maybe be more linear is now becoming cyclical, which my hope is, and I believe this is happening, is also helping increase the concept of data democracy and data literacy across organizations as people who were traditionally producers of data, not even knowing that they are, now also becoming heavy consumers of data and appreciating the whole flow of data and how that needs to be as pristine as possible, relevant to its value.
Good. Right, just David, both you and you just dropped me a note during the course of that conversation about the challenges thrown up by unstructured data and the emergence of huge volumes of unstructured data around, driven by kind of alternative data sets maybe, and various new types of data, and how they produce, significant challenges for capital markets firms. So you wanted to talk a little bit about unstructured data, and David, you wanted to have a brief word as well. So I'll pass it over to you initially, and then David, perhaps you want to follow up, and then we'll move on to the next question.
Sure, sounds good. Yeah, so you posed the question as data quality challenge. I assume it depends on where you stand today. For example, when it comes to unstructured data coming in PDF format or historically even in fax, or people mail in paper and then it has to be scanned by operations team and it become PDF or images, and then someone has to manually key those in. Historically, that's how we handle business processes. You have to have a paper. So there are a huge amount of people hired in operations whose job is to handle these and validate and double key and all that stuff. So people didn't feel it's a problem until some of it become electronic and other remain on paper. And even the electronic ones, if they are PDF scanned version, they're not digital information that you can extract, not to mention they are all coming in different format, then it is perceived to be a problem. But it's very difficult to backward require all your clients generate their data in the same format, because they are also sometimes huge organizations. They can't all conform to the same format. So you just need technology that is capable of handling different formats, quickly extract the relevant information and put it into your company's own system. I think that is a very solvable machine learning problem. The only challenge for some companies, they don't have enough volume of the same standard thing that is not possible for them to train an in-house process. Then that's where the third-party vendor can come in, because the vendor could potentially see a lot more observations across different clients and train a common model. or several versions of common model that could perform well, whichever template is being used. But for a large company that see like millions of such templates, such as BMI Mellon, we can train our in-house thing. I used to work at AIG, where it's also a large company, but the scale is not quite there. So in some cases, it's not possible to train your in-house thing. And it's best that you go to a third-party vendor to train their model for you. Good,
good. Okay, David, you wanted to have a stab at that as well, just talking about the challenges around unstructured data?
Absolutely. And in wholesale banking, there's a lot of unstructured data in terms of what we gather from our customers as we onboard them and go through our standard regulatory requirements around KYC, et cetera. And you bring all this documentation in, and some of it's digitized and some of it's not. And, you know, and Yu was just commenting on this to some degree, how you embed and how you get that in your systems to make it useful, and how much time and energy do you spend up front on taking key attributes on unstructured data and getting it into a structured format so that you can leverage it over time. And this isn't a place, and you mentioned tools and opportunities here, but where, you know, we haven't talked as much about RPA, where RPA can come into play, but it does depend, like you said, on a standard structured document and having enough volume there so that you can repeatedly set up that process. But then something Victoria said earlier, and Victor, you caught on, you actually are the one that raised it about this whole monitoring of behaviors. And so this double 2I, 4I thing is all behavioral activity, part of processes, and how can that behavioral component of machine learning and AI potentially play a part in here, monitoring, or maybe I'm speculating, right? Monitoring, evaluating keystrokes and how that works, and inputting data, but then also how do you, the digitization and the optics that you can use to get more and more data out of this unstructured and into structured so that you can make it leverageable for downstream consumption, where you would be applying AI for data science reasons and other qualifiers like that. So definitely something we need to continually think about, but I'm also curious, Victoria, on your thoughts there as well.
Yeah, Victoria, do you want to have to weigh in on that, talk a little bit about SmartStream, and SmartStream's work with AI around the management of unstructured data?
Yeah, absolutely. I think that at the moment, what we've really been focusing on with our latest AI and ML solution is what is still currently very challenging, actually, which is taking multiple formats of data at the same time and allowing AI to analyze and make digital fingerprints of that data and ingest that data. So we've just really We've just really been able to go to market with a fantastic process to take in multiple formats and transactional data sets. So, you know, CSV, Swift, text, mainframe databases, JSON files, lots of different formats of structured data. And we're enabling AI to analyze all that data, and we're giving the whole process of building rule logic and configuring data reconciliations over to AI and exposing the results to the end user in literally minutes and seconds. So that's what we're doing, and that's where our strengths are. I think the next phase will be, and you guys have already touched on it, being able to ingest the unstructured data. Now, we would and we can very soon will be likely to take in PDFs with, you know, a semi-unstructured structure, if you like. But you know, these forms can be receipts with handwriting. You know, they can be all different types of, you know, data sets in PDF and image formats, and they may also require third-party tools, OCR, even RPA tools. I know a lot of people in the industry are tackling this with some kind of data management tool plus an RPA-based solution as well. So we're focusing on taking an industry sort of data management process and applying AI and also observational learning to that process to improve that. And with the PDF piece, you know, and the unstructured data, we're getting more and more unstructured, if you like, but maybe it's not something that we've delivered just yet, and I think that all vendors are really pushing very hard for that capability. It's very hard to have it all in one place, and like you said, you need to be able to consume tons of it to get it right, and the vendor has the strength of doing that. I mean, we've got around 2,000 customers, so we would have that economies of scale benefit as a vendor rather than going to market with that technology or building it yourself in-house. I think we'd have that strength.
And I suppose the big advantage with an AI as well is that once it's learned a task, it understands that task. It's learned that it doesn't forget that task. Yes. It'll continue to, and it gets better and better at that task. So it, as it becomes more experienced, it becomes more efficient as well. Plus, also, you don't get to the end of the year and your AI says, "Thanks very much, but I got a better offer from the bank across the street," and your AI, goes and works somewhere else. And it doesn't take days off and it doesn't fall asleep or whatever. That's the beauty of the technology, in that it just gets better and better, ideally. And but of course, I suppose they've got to be checks and balances in place as well. It can't be a black box just spitting out answers. That's another danger as well. So there has to be some sort of structure around what the AI is doing. But anyway, that's another conversation for another time. I'm very curious. That's one question we've done. We've been going for 40 minutes, so we're going to need to speed up. Time flies when you're having fun. What I'd like to do very briefly is just have a look at the first poll question, the responses to the first poll question, and that is about 60% of respondents believe that their firm suffers from poor quality data moderately. So their data is acceptable, but it absolutely needs improving, which I don't think is news to anybody, really. Now, we've been talking for 40 minutes on the challenges and the struggles, etc. Let's change tack now, and let's talk about opportunities and addressing the challenge. And I'm going to ask Victoria, you to kick this off, and then I'll ask David to come in, and then and you. Let's talk about under the opportunities, the specific opportunities and the use cases and business processes that capital markets firms can realize and or enhance through the application of AI-driven tools and or technologies. And I suppose the second part of that question is, how can clean, accurate data be used to drive revenue growth across the business? You'll be talking a little bit about that. So the quality of the data kind of used to push really important revenue-driving business processes within the business. So, Victoria, if you wouldn't mind kicking that off and just talk about what are the opportunities and around the use cases and business processes that capital markets firms can realize through the application of AI-driven tools and or technologies.
Yeah, absolutely. Now, in terms of opportunities, I think AI in the front end is definitely far more recognized and supported. I think everyone is keen and up for, investing in delivering sort of really ultra personalized experiences to customers. But more in the sort of operations space, we encourage our clients to look at AI where we can control risks and where we can increase the productivity in the business, which then in turn, as the opportunity, lowers costs and gives firms that room to focus their energy on profitability, competitiveness, differentiation. So, I mean, opportunity-wise, AI in data can be used for modeling the lifetime value of a customer, for fraud prevention, things like ID verification, KYC, churn prediction of your customers. And we look very much at building AI into data management, as I've sort of mentioned and alluded to do the task of comparing high volumes of data to look for discrepancies sort of instantly using AI. So we focus our technology on building data management processes where the AI does it all for you in a variety of formats in minutes rather than days and weeks, using AI. And that opportunity gain there is really productivity and speed, and very much removal of human error risk in decision making. And like you said as well earlier, you mentioned key man dependencies. You know, this is a huge issue, and by adopting AI in operations for very repetitive tasks that people don't necessarily really need to be doing, you know, that's a perfect opportunity for AI. Whereas I totally get that some of the front office services that require special source IP differentiation, maybe that's where you might look to deliver services in-house. But you know, we definitely see the business case for opportunities on the operations side for productivity, lowering risk, and on all the other things that I mentioned.
Mm-hmm. And also a key component of that as well, Victoria, is staff retention, because there have been various studies that show that you put staff into very, you know, highly manual, very repetitive tasks, they don't stay at the company for a long time because they get frustrated with that. It's boring work. They want to be challenged. And so you can deploy staff elsewhere in the high value tasks, right?
Definitely, definitely. And that whole sort of model of people configuring, you know, IT-based solutions based on code and IT skill set is just a model that we find people are moving away from. The businesses that I work with, well, when I say businesses, I mean business teams really understand their data. They know what is required of the data, and they spend a lot of time transferring knowledge and understanding of what they need to do with that data to the IT teams. And it's this constant sort of feedback loop. So the opportunity there is to remove that human dependency, that business dependency on IT. We really want to remove IT projects and often give you know, business people or any user without IT skill set the autonomy to do something self-service themselves with no code, AI applications, and that's what we offer. So, yeah.
Okay. Good, thank you. David, let's talk about the specific opportunities and use cases and or business processes that capital markets firms can realize or enhance through AI-driven tools and technologies. What would you say to that?
Victoria commented on this too, and I'm going to hone in on it because there's a defensive posture to what we do, and there's an offensive posture to what we do. And the defensive is reacting to regulatory requirements, et cetera. And that offensive is getting ahead of the game, where we want to run more future-thinking analytics against customer behavior, et cetera. But quite often, maybe unfortunately, maybe fortunately, because it drives funding, we start out on the defensive posturing. And so finding those use cases, and you know, KYC has come up a couple of times. There's other regulatory requirements in that same space around financial crimes, transaction monitoring, and requirements within that for understanding your data, being able to use modeling on the consumption side within transaction monitoring to make decisions about transactions and the potential suspiciousness of whatever that may be. So in order to do all of that, there's a couple of different angles. And then when I think about all of that, I think about it being scalable so that I'm also being opportunistic and building out for forward-thinking opportunities. But something we haven't talked about a whole lot is AI on understanding data, which is AI on metadata. And how can we spend less time administrating and trying in that understanding and compiling of information about our data, and spend more time on the forward thinking and look forward. And there are tools out in the marketplace that are growing and evolving that enable that technical metadata harvesting, that ability to start looking across that data to make better sense out of it quicker, so that you can make sense out of more chaos faster. Because that's ultimately what we're trying to do, is to get our end consumers, whoever's, you know, wherever this AI and analytics and consumption is occurring, that we can prove that it's fit for purpose. We can prove that it's consistent. We can feel self-assured that it's it conforms appropriately and that it's doing everything we want to. So there's an opportunity in there for AI on top of just understanding the data itself, and working our way through that. Then the other side of that is, so if using the transaction monitoring KYC example, BSA AML, and the requirement to assess all transactional data for various requirements around financial crimes. While doing so, you are building an enormous opportunity and a data set that also allows you to do trend analysis and forward-thinking analysis on customer behavior and opportunities there. So, we may not be vocalizing at the gate that that's what we're ultimately shooting for while we use this regulatory push, but behind the scenes, that should definitely be on our strategic radar of where we want to go using that foundational set of information that we're collating to cover all of that.
Good. Okay. Moving over to you, how can clean and accurate data be used to drive revenue growth across the business from BNY Mellon's perspective?
Sure. Yeah. The clean and accurate, I guess the definition evolve over time, but definitely in the recent years, you see so many more data science positions and machine learning AI being mentioned because of one, a huge explosion of availability of data and richness of data that allow data scientists to build models on that further enhance business decision making. For example, we have in-house models that predict liquidity for accounts balances in intraday basis and daily basis to better manage and in some cases create millions of dollars in actual revenue. We could also leverage both third-party and in-house data to predict certain market indicators, for example, security lending fees or treasury markets repo specials fees. So those are enabled by more availability of richer data as well as just a fast-growing, cheapening compute power that can handle hugely complex models that in the past it would be too expensive to train. But other venue of recent development of machine learning predicate on its ability to understand unstructured data compared to before. In financial services, I think the text or language data is more relevant than images, but those language and images are two areas of machine learning that in recent years receive a lot of advancement. For languages, all banks handle a huge amount of documents, be it client wire transfers or payment authorizations or trade documents. You can imagine in the past, those are all handled by human. In recent years, the machine learning capability is allowing some understanding of machines to extract what you want or giving appropriate response. And that can also have implication to how you serve your customers in automatic email classification or chatbot to give human-like response to your customers quickly so that they can self-service some of their needs rather than waiting for humans to handle them in days or weeks. So those are all due to the advancement of natural language processing. And largely, I think some audience also asked this. Like I mentioned earlier, some of the models require quite a lot of data. And they've also mentioned this for fraud detection or some irregularity of data. Maybe individual companies observe some occurrence, but by nature, the fraudsters will not try in a fixed way. They will try one way until it stops working, they will try another way, and each institution may only observe a small subset of it. So training a model on your limited observation is very difficult, but across companies, usually they are not very happy about telling how many fraud they got because it's bad publicity. So there are like a technological advances that allow banks to anonymously share such information without revealing who is getting what. So I think the technology is helping company to share data across the firm and build model on top of it without seeing exactly what fraud you got in your own company. And there are many other similar examples like this.
Okay, good. All right. We need to move on. We've been going for the best part of 54 minutes now, so we haven't got a lot of time left. What I'd like to do is quickly open the second poll question to today's audience members. The poll question should be in front of you right now. Which parts of the business do you believe suffers most from poor quality data? You've got 3 options there: front office, middle office, back office. Please take a stab at that. Just let us know what you think. And we're going to need to only choose one more question to, or one more theme to discuss before we finish today. And that theme is going to be, how do firms make the business case for deploying in-house or buying and deploying off-the-shelf AI-based tools to help them manage their data and optimize their business decision-making. Victoria, I'm going to ask you to kick this question off, because this is really, really important. And that I should imagine that you're probably going to talk a little bit about identifying clearly defined use cases before you can build a business case for deploying the technology. But I know from my experience in the industry and covering technology for quite some time, there is no way that the ExCo will sign off on any project unless there is a very solid business case for the deployment of a technology or a project. So, Victoria, how do firms go about that? What are the key components that they need to consider when building a business case for the deployment of AI technology?
Yeah, it's a really good question, something that we spend a lot of time doing, looking at those specific use cases, building the business cases. I think it's unique to the needs, the growth mode, and the aspirations of each firm that you're dealing with. No prospect is cookie cutter at all. They're all in different stages of their business. No customer wants the same things. We need to make sure that our data management solutions and what we offer in terms of use cases are agnostic to those things, but that's another issue. For business cases, I have to think about, obviously, what are their objectives to achieve with their target operating model, and we need to essentially, obviously, price that correctly for both parties mutually. I think most business cases in data management in the space that I work with are often driven by total cost of ownership of technical and operation resources of a data management function, which can be huge, as I'm sure you guys are all aware. So it's either looking at that total cost of ownership of the whole function and understanding what a lot of those unknown costs are, which is really tricky to tackle, or they're compliance driven and they're based on your ability to lower risk and identify issues so you can act quickly and not get fined or shut down. Those are the key drivers for any business case. The use cases, obviously there are many. They need to be well defined, and we need to do our proof of concepts, and the due diligence needs to be done, and we prove that we can do that. We can solve the problem. But in terms of those business cases, it's often that total cost of ownership of and I don't just mean the license fees and the complexity of the deal that you have with the technology that you're using, either in-house or from a vendor. I mean operational resources and time it takes for people to perform certain tasks in that function. It's well understood that delivery and cost models of building solutions for operational data management is really complex. It's really hard to measure. There's lots of unknowns. So, I mean, those are the things that we really base our business cases on, and we're very transparent with our proof of concepts. We've got tons of metrics, particularly as to how AI it's really tangible. We've got domain expertise as well as our AI innovation labs, so we've got all that historical context as to how long we know these things take and how many people they involve. And then we introduce AI, we show the results, we show the additional capabilities through analytics and also observational learning that we've mentioned a few times, where manual interventions that a human may make actually gets learnt, and then you get more performant and you can scale more and improve your business. So all of that goes into the business case. I'm conscious of time and talking too much.
Yeah. Thank you, Victoria. Yu, I'm going to ask you to have to comment on that question as well. How do you as a business, build a solid business case for the deployment of, or the development of new technologies in the case of BNY Mellon, if you're developing it in-house. And then David as well, if you wouldn't mind just finishing off and ending today's conversation, just talking about the business case. We haven't got a lot of time, but if you wouldn't mind, both of you, just having a quick comment on how you go about building a solid business case for the deployment of the technology.
Sure, yeah, I think we also consider whether something is worth building in-house versus bought from outside. Usually the platform type of offering is bought from outside because banks are not setting technology standard. There are a lot of big tech companies that's focusing on doing that. And there are niche products where the vendor is a lot more knowledgeable and has a lot more training samples. But our inside team focus on tackle the type of problems that require deep knowledge of the domain problem, as well as the data, especially our data. So there's nothing you can buy directly from outside. The model has to be built on our in-house data, integrating business knowledge. So those are the cases where we will choose to build in-house. And of course, the business value has to be significant. Otherwise, they can just, whatever they're doing today, doesn't have to offer up technology for it. There is a cost to technology as well.
Yep. David, final comments to you.
Yeah, a couple thoughts here, just tapping into the in-house third-party conversation for a second while thinking about the development of use cases, business cases. There's a lot of complexity in determining in-house versus third-party, and a lot of that's based on your organization and your ability to stay current with what's happening in the marketplace at the same rate that third-party vendor applications may be doing that, because that's what they're paid to do. That's what that's what they do on a day in, day out basis. So pulling in that consideration. But then when developing that business case, I'm a huge advocate too, because for building something scalable and growing and iterating it on over time so that you can get those quick wins and prove that value add, but not trying to tackle this enormous initiative that the fruits of the labor don't present themselves for 18, 24 months. We're beyond that these days in terms of being able to do that. But third-party vendors also need to be approachable in the sense of helping in scalable models, helping in bringing in things that are, the cost of entry into that tool is not so high that it impedes the ability to test the product, make sure it's delivering something that's of value and helping drive forward. I know we're about out of time, so I'll stop there. I'm sure I could say a couple things more, but Victor, I'll turn it back over to you.
Thank you. I'm sure we could actually, we can continue for another hour actually, but we won't continue for another hour. I've got a couple of things to report back to audience members. The second poll question read, which part of the business do you believe suffers most from poor quality data? If I remember off the top of my head, I think 60% said back office, 20% middle and 20% front office. So thank you very much for that. Thank you to today's audience members for participating. Unfortunately, we just scratched the surface here. And who would have thought that talking about data and AI would be so interesting and would produce such an interesting discussion. But really that just leaves me to thank my fantastic panelists, Yu from the Advanced Digital Solutions business within BNY Mellon, to David Wright, Chief Data Officer for North America at Commerzbank, and of course, Victoria Harverson, Global Head of Business Development at SmartStream. Thank you all very much for your time. Thank you for your expertise in helping put together a fantastic discussion. It was very interesting and I'm sure interesting to audience members, but you also made my job very, very easy. So thank you very much for your help. I'd also like to thank Olga and Sabrina. They are in the background, making sure that everything worked really smoothly today. So thank you very much indeed for your help as well. And finally, to today's audience members, thank you for your participation. Look forward to catching up with all of you in the not too distant future. Thank you and have a good rest of your day.